right, everybody. Can I get a mic check out there? How's everybody doing? Hold on one second. I gotta kill a fan. Let's try that again. How's the mic? How's everybody doing? Let's kill the audio. Let's get going here. Good morning, everybody. Let's talk about some crypto. So, if you're new here, welcome. If you're not, welcome back. This is Brandon with Crypto Trades and Tech, and we are an extension of the Conquering the Markets family. We focus on cryptocurrencies, trading cryptocurrencies, learning about cryptocurrencies. So that's what we do on this channel. And I'll be right back 1 second. All right, so what we're talking about today is the effects of this Evergrande, the Chinese real estate company that's having issues, its impact on the crypto markets. What did I just close? I closed my disclaimer. Let me pull back up my disclaimer 1 second. So anything you hear here, just so you know, this is not financial advice. I'm not a licensed financial advisor. This is just me sharing my opinion of what I see going on in the markets. And if you listen to anything I say, you're going to end up losing all your money and end up living in a van down by the river with a couple of cute puppy dogs. We've got Boneholder and Doge hanging out here by the van, in the van by the river. But please be very careful. As always, the crypto markets are extremely difficult sometimes. Right now is one of those times when it gets to be kind of difficult. But the question we're going to ask today is it time to buy or is it time to sell? Where are we at in the cycle? Now, I'd like to bring your attention to Alan Au's most recent thread here. Put it out yesterday, September 20th. Now we're going to see some things as we go through this thread that, Alan's pointing out that we're neither we've never hit a euphoric state since basically 2020. The price action we saw in late 2020, early 2021 never really hit a euphoric state. And we've never even hit a capitulation either. So as bad as this sell-off was over here, we never really had a true total capitulation. It was a few months of sideways, and then we've picked up since then. That's kind of the theme that I got out of his thread here, is we're very much in between. So you can see he's got this is a model that he worked out. And you can see the capitulation lows as they come into this market bottom indicator he's got, and then the market tops. So 2013 kind of had, two of them, 2013, 2014. Then we had the one major one in 2017. We never had a significant market top that really, a euphoric top that comes into that. And we've never had a capitulation low that comes into that bottom. So we've had a couple of them. Now this one, the COVID 2020 one was a bit of an outlier, the liquidity crisis of 2020, I should say, really. But we've never had, we've just kind of been floating right in the range of what we'd expect. And there's several indicators that kind of also highlight this. You see that the volatility has somewhat decreased on the MVRV score here. And so you can see that we've never hit this euphoric top state, and then now we're coming kind of into this support area right before potential liftoff. This is what, we've hit that or come close to hitting it several times before a potential liftoff. Now, the structure of this market looks totally different than the last two, right? We had this very defined early peak in 2013, a second defined peak in late 2013. And then in 2016 to 2018, we had more of a gradual, constant ramp upward. But the beginning of it was kind of a slow ramp, and then it really just got euphoric at the end. And then obviously in 2020, 2021, we had a very large influx of capital, a lot of leverage into Bitcoin specifically, and then that leverage got wiped out over the summer. And then we've had a little mini leverage push and leverage get wiped out here. We take a look at derivatives, and the derivatives market, tells us a lot about the state of the market. So we'll look at that here in a bit. So let me take a look at comments here before we continue on with Alan's thread. Hi, everybody. So I got, I don't even know how, I'm just going to call you Bind, because Chandra Bond, I don't know how to say that part, but Diamond Hands over here. Got Sergio and Jonathan. Hey, guys, good morning, everybody. Moon Boy is all here. Yep. So, yeah, I don't know. I guess I'm a Moon Boy, I don't know. Because I think it's possible that Bitcoin makes big moves. Because I think it's not totally outlandish. Hold on. That Bitcoin does big things, then I guess I must be a Moon Boy. I guess. All right. But we'll keep watching him. So this is another indicator of that we're kind of just floating in between really right now. And then the 30-day moving average on the MVRV Z-score. You see, Alan mapped out basically 5 basic waves in 2011, 13, and 17, 18. And the 2013 was a very defined first move, a very small middle, just consolidation here in the middle, slow ramp up, and then a very defined peak. And then obviously 2017, 18, 2017 really we had that kind of slow ramp up and then a big blow off top. Now this time obviously we've had the one big move, and then we've cooled off. And are we doing a little 3-4 here, somewhat reminiscent of 2013, and then we're going to run again? That's to be seen. To be seen. All right. Walter, I was joking. Yeah, I know Walter's fun. I was going along with it. I don't really care. People on Twitter, I had a guy yesterday. I put my 120-day SMA, I tweeted the 120-day SMA, the almost perfect touch we had coming into it yesterday. And somebody comments on my comment, yeah, just picking a random, SMA to fit your narrative. I'm like, well, he's not wrong. That potential, that 120-day moving average has fit my narrative for about 2 years now. So yeah, I picked a moving average that fit my narrative about 2 years ago, and I've been tracking it ever since. So what can I say? I guess he's not wrong. All right. So the HODL waves, obviously, again, this is just highlighting that we haven't really seen a true euphoria or capitulation in this whole market cycle. We've been kind of just slowly ramping up, floating along here really the whole time. One problem with going live early in the morning, man, I have to have my coffee, and this creamer just gets me all. I need to go back to drinking black coffee, but when I make cheap, quick coffee, I have to have creamer and sugar. I have to do the boiling the pot on the water and hand pouring really good black coffee before I'll drink it black. I love black coffee, it just has to be good. All right, reserve risk. Similar to that, when BTC exited mid-cycle correction in 2017 bull phase and onto wave 1, onto the CTM wave 1. You kind of see here, yeah, we had that big correction. You can see the reserve risk is a little bit more pronounced than the chart itself, but it mirrors the chart obviously very closely. But you can see this key support line as it, the difference between entering the bull and going into the bull euphoria, and then the other side coming down into the capitulation phase. All right, everybody keeps talking about the start of the bear market. This is a good spot for Wells to send the market the opposite direction. Still waiting for AVAX versus eGold. Hey, we'll talk about a little bit about that today. I don't have all my notes together. Avalanche is a lot more complicated than meets the eye. And at the end of the day, it doesn't actually directly compete with Elrond in that it's really more of a competitor to Polkadot and Cosmos. So the video is kind of morphed into more of a let's talk about Ethereum or Cardano or Elrond, maybe those three specifically, versus Chainlink. Avalanche, Polkadot, and Cosmos, right? So I just as a quick primer on that, I've got some tabs up here about Avalanche if we get to it. But Avalanche is kind of this, it's more akin to a Polkadot. It's basically a directed acyclic graph version of Polkadot. If I were to just make a silly over generalization about it, but we'll talk about it. It's definitely got a lot of promise, and when comparing it to Polkadot, there's some things that this is more compelling to me. I will tell you from an investment potential, Elrond is still the better of the two opportunities. I mean, it's more related to market cap and market potential, but there's a few other factors there as well. And I'm just not. After being burned by IOTA, I'm not a huge fan of directed acyclic graph, based ledgers, those graph-based ledgers right now, until I see one that's really got it figured out. Maybe Avalanche is it. I mean, the other part of it, I'm trying to dig into their tech. Almost every single DAG, there's some hidden centralization component. It's necessary for bootstrapping and then orchestrating once you get all the nodes up and running initially. And they start building their graphs and doing their gossiping, whatever they have to do to make the DAG protocol work. It's generally called some sort of gossiping. They get into a state that either to begin they need some sort of centralized orchestrator to get them connected to the right nodes and into the right point in history in the chain. But then the other problem is at some point they need a central orchestrator a lot of times to correct against certain problems that can crop up, and then security. So what I'm trying to figure out is exactly how Avalanche works around some issues that other DAGs have run into that force them to have these centralized components. And I haven't quite got to the bottom of the tech yet, so I'm not ready to do a full video. It's quite complicated, but it's really advanced. You can say that. Do you have stock recommendations that I can purchase in my IRA that some are mimic crypto moves? I don't have recommendations. I don't really make recommendations. I will tell you that myself, I buy the standard GBTC or ETH, Bitwise, and then some of the other trusts that I keep an eye on. And I play the premium game. So when the premium expands a lot, I'll trim some. And I'll buy back when the premium kind of collapses a little bit. And generally speaking, when the premium is expanding, what's happening is there's a large inflow of capital. Probably the price is going up on the chart quite a bit. And that premium is actually just like it's the money funneling into the fund that's going to later fuel purchases and the asset. And so there's typically a time you can start to see the price start to top out, and what's the word I'm looking for? The premium is still quite expanding and starting to curl down as well. And generally speaking, you can do pretty well exiting on that big premium spike as whatever the underlying asset is enters consolidation. And the newer ones, obviously, anytime there's a new trust launched, if you're in a bullish crypto environment, it's probably not a bad idea to pick some up right away because they all seem to spike at the very beginning. The newest Grayscale Trust one just did it's a large cap trust, just it exploded when it first came on. Otherwise, MicroStrategies is a proxy on Bitcoin. Obviously, everybody knows that. And then a few of the miners. I don't trade the miners very heavily. I have one that I hold on to long term. Otherwise, I did a previous video on this, but in the past they've and I have a video. If you go find, I did a video about mining stocks, crypto mining stocks, or stonks, I should say. but they've underperformed Bitcoin by the end of the cycle. By the time everything's done, so when you get these big runs, they obviously outperform, but then they are like leveraged to the downside when there's a down move, and so actually, and also when Bitcoin simply consolidates, they oftentimes will sell off too. So I don't know about this time. I have to go compare what Riot, the gains, like Riot is the kind of the major benchmark of the miners for me. What Riot has done versus Bitcoin for this bull market run, and see if it's outgained, or let's take a quick look at that. I'm just curious. I haven't looked at that in so long. Just look at Riot blockchain real fast. So this is kind of like I said, a proxy on it's way outperforming. So I had a bunch at like a couple bucks that I sold. That was a mistake. I'll just tell you that. You can see us charting it down here, and when we got one of these pops, probably back here somewhere, I went ahead and rotated out into Bitcoin itself. But this is out. This is definitely outperformed Bitcoin this time. So yeah, mining stocks, Riot, Mara, Hive, are some to look at, but not a single one of those are my recommendation. My recommendation would be to buy Bitcoin and hold it in a cold wallet. That's my first and initial recommendation, and to do so based on this. If you're new, especially if you're new, what I recommend new people do is basically when you see this thing, when it's blue or dark blue, you buy and you DCA in, and you stop DCAing when the color turns this like light color, and you sell some when you get a yellow. So, for example, people who are using my DCA strategy would have been buying pretty aggressively through all that, the crash to 5,000, 3,000, whatever it was, all through up to November. And then in December, they may have made another purchase, but they would have quit making purchases starting in January, and they would have sold in March and April, sold some. And then May, June, they would have made their first purchase back based on this chart in July, and they would have added June and July they would have bought. So they would have bought back what they had sold up here in those couple months, and then added some more in August, and probably get another buy for this month too. So they're adding now, right? So if you're following this general strategy, when it's blue or purple, you're DCAing. When it's orange or yellow, you sell a little bit. When it's red, you sell a lot. And so that's pretty much it. So this is what I recommend people do, really. Is just DCA in, and then kind of DCA out, and hold it offline in a cold wallet otherwise. That's my general base recommendation. All right. So, can you discuss the Tether FUD exposure to Evergrande? Yeah, so let's go to that. Evergrande. Let's get to the Evergrande piece. All right. So, we see here this analyst says there's a Lehman event in China every 36 months. We don't find Evergrande to be a Lehman event. Here's why. And then this newsletter. I can maybe put this in the video description. Let me put this in chat real fast. All right, this Twitter thread if y'all want to check it out. And they go on to explain why in this FX weekly article. Why they don't think that the contagion effects. Or really what it boils down to, what the market cares about is contagion, right? Which basically is this going to spill over from China to the rest of the world and create like a debt, is it going to burst the debt bubble, basically? I mean, that's what everybody's really worried about. Is this meltdown in China or China meltdown going to cascade to the rest of the world somehow? So they go through and they analyze several factors here and say, okay, you know what? Basically, I think the summary of it is that China has enough resources to deal with this and not let it spread outside. But there's another good, so you can check that article out. There's a lot of good details on it. This other thread here, same thing, Evergrande FUD, is this really that big of a deal? And what I kind of, and the media makes it seem like Evergrande is like by far the biggest developer or something like that, right? And it's just a big deal. Well, they're on a list with a bunch of others, and they're not, as I take it, they're not the largest developer in China, but they're one of the most highly leveraged, and so they're kind of a highly leveraged company. And so this thread goes into talking about really why the market's freaking out and their negative margin and everything else. But this Mira makes comment here that, yeah, a moral of the story, nothing dramatic happens. These companies get managed. So let's go back here. You see here that the CCP can basically pick up the phone and make a phone call. In China, the largest banks are state-owned enterprises. These issues are gradually resolved with, I don't even know how to say that word. Where'd it go? It disappeared. I was trying to pronounce it. I don't know what word she used. Sorry, my thing disappeared. I clicked on something. Oh, moral suasion. So I think it's like basically they're persuaded. Or a phone call from the CCP. In the West, the government doesn't have these one phone call tools. This is a Western media. This is what Western media doesn't grasp. CCP is extremely smart and do anything to ensure social and financial stability. So what about crypto? You see, not a major company in the middle of the pack. So they're really not that big. Yeah, they're 8th on the Chinese, like the size of the real estate market. So if Tether, here's kind of my feeling on this. If Tether had exposure to Evergrande, they're probably going to have equal exposure to multiples of these, which means that they're going to have a lot more of these other ones which aren't at risk currently, right? So I'm not. I don't think Tether has exposure to it either, based on what they're telling us. So that's, but you know, it would be a short-term liquidity issue if Tether had issues because they had exposure to Evergrande, and it ends up going under, and you know, it creates a ripple effect in the credit markets. Then we could have a short-term issue. But there's already so many other stablecoin options. And I know that everybody thinks that Tether just prints money out of thin air to pump Bitcoin, which, I mean, I guess it's technically possible. Based on what I've researched, they're actually creating Tether on real inflow of capital. So when somebody, you know, puts a lot of capital onto a real fiat onto an exchange and converts that for USDT, they have to go print to match that, more or less. And so from what I can tell, they're not that far off. Now there may be some, I don't know, but there's so many other stable coins out there that I think the market's going to move to. But I'm thinking this story is probably well overblown, is what I'm getting from reading this. And I'm not an expert in Chinese real estate. I don't know the first thing about it. So I don't know. I could be totally wrong. But based on everything I'm seeing, this seems like a little bit of orchestrated FUD. Now, go back to our cycle modeling and where we're at in the cycle and what's going on here. It's almost a bit, I don't know how to say it, but it's just, there's obviously manipulation going on. I can't say it any other way. There's obvious manipulation in the market. And here you can see the kind of fairly obvious Wyckoff pattern that played out over here, right? You had this peak here, 2, 3, 4, and then there's the Wyckoff people tell us this is a distribution pattern. I'm not a Wyckoff expert. All I know is that they were right. So this is some sort of distribution pattern. It sold off initially here. Notice where it came into initially. 120-day SMA had a nice bounce, but back into this trend line. Now this trend line we should have probably been watching a little bit closer, and then it curled over, and we had a big sell-off and a multiple months of depressed price because of that. Eventually bounced back out of that. Now, you know, then the Wyckoff people also then tell us that this was some sort of accumulation pattern, which, you know, we could kind of, I could see that one after I started looking into it more. But again, I'm not a Wyckoff expert, so that's not what I traded. I simply traded when I saw a breakout of that. All right, so that's what we got in on the breakout. Now, interestingly enough, we have the exact same pattern that's you know, was formed here. We had the exact same market dynamics of these kind of this 3 drives move and then a big turnaround, and we got below this trend line, kind of the same deal, consolidated below it and then fell again, right? Fell. This time we stopped, you know, last time we stopped closer to like the 50, the 21 week EMA, kind of caught support there, and then this time we're down at the 120. Now we're consolidating below the 21 week EMA. You know, this whole thing right here needed something to ignite it, and this whole Evergrande story, I don't know if it was purposefully overblown. Obviously, if we go look at the broader markets, there's a very kind of eerily similar set of dynamics going on over here in the. And this is a little bit different, but an ascending wedge pattern on the S&P 500. But at the end of the day, one could probably argue that we had a very similar kind of 1, 2, 3, multiple drives pattern. And if you draw this through there, this is what you get, right? Something like that. Maybe a very similar type of pattern. So, again, I'm no Wyckoff expert. I don't need to be a Wyckoff expert the way that we trade. We can navigate around these sort of issues very adeptly without needing to use predictive, kind of what I would call predictive patterns. But we've broken down out of this ascending wedge. So the broad market is in line for a bit of a potential correction here, which could absolutely be saved early. I'm kind of looking at this level right here just to share this with you as a place where the markets could kind of maybe bottom out initially. So, of course, it can bottom out anywhere with the power of the Federal Reserve printing and buying. But it's a 7% correction there, and then you got this other wick low. These highs over here, somewhere in this range, could be caught around 4,000. But we'll see what ends up happening with the broad markets. I don't follow those as closely. Obviously, we did break down here. We're in a little bit of breakdown territory. I do expect, actually, oddly enough, I've been waiting for this sell-off in equities and an equivalent sell-off with crypto. But what I've been waiting for is for equities to kind of bottom and maybe continue to go sideways or bleed while crypto actually runs. I've been waiting for that rotation because I think. Now, I think people misunderstand that. I always call them dumb. They're dumb comments on Twitter. Yeah, but no, the money. Okay, not all the money from equities is going to go to crypto. That's not what I'm saying. I'm not saying that everybody's going to sell every stock that they have and buy nothing but crypto. That's silly, right? When we talk about rotation, we're talking about very large funds with very large amounts of money they need to manage. Going, all right, we've had this huge run on equities. And the valuations are just tough to kind of, to continue to buy here. We need to find something else that's going to give us good return. We don't know that equity is going to give us good return. It's not that they're going to crash. It's just that this might go sideways for a year. And we're going to have several quarters of sideways. And we need to find something that can help us beat the market, right? And that's what fund managers are all about. Like if the S&P goes totally sideways, cool. They can go totally sideways too. The problem is they have fees, and so they're actually going to be losing headway. And so in order to make up their fees, they got to find something that they think that can beat the market if it's going to go sideways. And so you look around the landscape, you go, okay, well, hold on now. Bitcoin's been this huge uptrend, and especially if it kind of bottoms out somewhere around here. Crypto is just, you look at this chart. Look at it like this. It's just going up and to the right? This is a shorter term crypto chart, but they're going to go searching for places they can get some reasonable return. And this has just been going up and up and up and up and up. And there's a lot of growth. There's a lot of stuff, excitement happening. The whole NFT craze thing that I think kind of popped the other day, it sounded like, I don't know. But it's just going up and up and up and up. And so this is a good place to maybe try to put a little bit of money, rotate a little bit of our funds from equities into this asset class in order to and get some exposure here in order to hopefully outperform the broad markets, right? So, over the long term, that's what they're going to be looking at. That's what I think. So I don't think that everybody's going to sell every stock they ever had and buy nothing but crypto. And when people I'm sorry if you're hearing this and you're on Twitter and you're one of the people that said something to me like that, just please get a little bit more well informed before you start making comments like that. Anybody who's talking about market rotation, we're not talking about selling every last thing of one asset class to buy nothing but the other asset class. We're talking about fund managers with billions and billions to manage selling a few percent of one asset class and spreading that out between another couple asset classes, and maybe 10% gets sold in one asset class, and maybe 3 or 4% finds its way to the speculative asset class to try to help them outperform. So that's what I'm talking about. All right. Anyway, smaller Wyckoff, almost exactly the same. No problem. MicroStrategy's largest holder of Bitcoin. Is that true? Do the Winklevoss twins have less than MicroStrategy? I kind of think that the Gemini Trust might actually have a little bit more. And then Grayscale obviously has more as well, but they're a trust, and they're not a company, an entity that owns it. So, but the Grayscale Trust, I think, has quite a bit more. 300,000 Bitcoin last I looked. I could be wrong. Don't quote me on that. A lot. So you got a couple big players. You got the Gemini boys, the Winklevoss twins, and Gemini Capital that has quite a bit, and then you got MicroStrategies that has quite a bit. But yeah, as far as publicly traded companies, yeah, I don't think anybody's anywhere near MicroStrategies. Tesla's obviously probably the next closest, maybe. CCP has it handled. Keep printing. Yeah. So I'm going to share this with you. So I haven't actually read the book all the way through before, but I started listening to the Audible version of The Creature from Jekyll Island. Now, I know there are people that probably think that book is just full of conspiracy theories, but there's obviously some fact in there too. And that book is all about how a lot of these crises that we perceive as some big crisis, as the media spun, it's really not that big of a deal, and they probably should have let the bank or the institution fail for their poor management, and the market would have been more resilient for it moving on. But a lot of times they're manufactured events, and they use those events to do some, moving around of money, some funny accounting, and they want to get people hooked on lending, right? So banks make money not on how much assets they have or how much assets they have out. They basically are taking money that's created out of thin air from the Fed and reloaning that out, or from their depositors, right? And relending that out. And all they care about is the cash flow from the interest that's generated off of those loans. And so they want to get people addicted to credit, and they want to keep them addicted to credit, and they want to basically get it just as high as they can to where they're just, the person's paying max pain on how much what's the word I'm looking for? Not credit, but the interest charges. Goodness gracious! So they want to get them to the basically the max pain point of what they can pay in interest, and they keep restructuring the loans or whatever to keep them paying that interest. And that's the name of the game. And so a lot of times these events are more the banking cartels trying to make sure everybody is totally capped out on what they can afford on credit and debt, so they can keep making those interest payments, and the bank keeps that cash flow cow coming in. So. Sometimes, and it's really usually not as big of a deal as the media spins it to be, that there's going to be some huge fallout, this, that, and the other. It's a lot of times it's spun that way in the media so that people kind of don't decide to look into things a little closer. So I don't know. I'm not in China. I don't know anything about the Chinese real estate market. That's true for maybe some of the Western and European nations, what I just said. I don't know about China. I'm not an expert. CCP can damage the West with, I'm reading comments here, Evergrande, and have deniability by saying they suffered to death. I just got the message retried. I was reading it. How much allocation do you have in eGold, and what do you think it could 10x its market cap this cycle? I'm currently like 6% in Elrond. I'm being very gradual. This is why I'm being very gradual, moving funds to it, right? I still think we get a bounce, a big move. Maybe when Bitcoin makes its parabolic move, I think it's going to either hit 50 or 57 or somewhere in this range, like on the dominance chart. And that would be a pretty big move, which means that if that were to happen, by necessity, all cryptos are probably going to lose value versus Bitcoin. And so all their charts are going to be a little bit reset. I think in the case of Elrond and other projects that have a lot of upside, that are good quality projects, it'll be much more of a consolidation event where Elrond will just simply go sideways for a while. And so I'll be able to watch for that structure. Now, I did say that when it broke out above this, that I would buy. We broke out. By the time I saw it, we came right into a resistance. So I'm waiting for either this resistance to be flipped and confirmed to support, close above it, come back into it to test it, and or for us to get rejected by it and retest this trend line or something. So, but it broke out a little bit faster than I could catch. I would have liked to have bought right there, but I didn't catch that. So, on the 1 hour, I think that happened probably while I was sleeping and or getting ready for this live stream. So, yeah. But this stuff, obviously it moves around a lot, and so I do kind of expect, like I said, in the case of Elrond, it might go ahead and break out here. Now, I did add over here. These are DCA purchases, very small purchases. I'm just adding, chipping away at building up my position size. Like I said, I initially got pretty fast to 5% by rotating a bunch of Cardano sold at $3 into Elrond. So that got me to 3%, or to 5%. And then I've added twice more that's got me up to 6%. One of those two adds in this 12-hour came back down. I counted this as support. We had this 12-hour test candle, and when we retook that out, I bought right there. And then the market just turned right around on me. And so I didn't have a stop on it or anything like that. It was a DCA purchase, and it was just a calculated entry on. Okay, so we were in this case, in Elrond's case versus Bitcoin, it was in price discovery. Came back to test that level, and then was showing signs of a bounce. So that was a bit of an opportunity for me to take a DCA on the cooling off here as it came into support, and that was kind of evidence that it was going to find support. But then, we had this whole broad market sell off. So now I'm waiting for the next entry. And I'll continue to DCA into it until it's up to about maybe 10% for me, and that'll help me. It's going to be a nice bag to have for the final alt season 2. I think this will be a good one to hold. There's other names that'll be good to hold as well. Let's see what Avalanche is. Solana. Avalanche has been on an absolute tear. Yeah, it's already taken back out the highs over here. And Solana's kind of cooling off a little bit. Looks like, huh? But yeah, as far as, I don't own any Avalanche. And the reason I don't own any Avalanche, and I never have, is I've been burned about a DAG tech, in the past with IOTA. Although I ended up making money on my IOTA play, I had to hold it. I had to be a bag holder for so long after it crashed with a big outage that it was just painful. So because I've been burned by that, I've not been a huge fan of the DAGs, and I have Polkadot exposure. So Polkadot's my main play in this space. I was more of a Cosmos fan. I still like Cosmos just fine. I think they're all good actually, but Polkadot had, to me, more upside and more potential, and especially this cycle, the whole ability to create hype. And Avalanche is one I didn't see doing this well, honestly, when I was evaluating Polkadot versus the field. And the reason is again, that those directed acyclic graphs I thought would be more, and they may pump this cycle, but I think they're going to be maybe shorter lived. I think next cycle is when those, so I'll be watching very closely in the next cycle, and maybe in the bear market, I might be loading up on things like Avalanche or Hedera hash graph, or Nano, or whatever. We'll do some more research on who the leaders are in the DAG space. But my kind of plan was Avalanche is one that I'm looking to accumulate in the next bear market cycle. My current play in that space is Polkadot. This is my opinion and where I'm at right now. So, but yeah, Elrond. I do think Elrond has the biggest potential in the top, say, 50 market cap wise, to make the biggest moves in alt season 2. So that's why I'm slowly building up a nice bag on it. Now I still have I didn't sell 100% of my Cardano, by the way. I still have a good sized bag of it that I'm just going to hang on to, and I may not even sell it in the market top here. I'll probably shave a little bit more to buy back, but I'm pretty much done shaving for the most part. That one. All right. Bitcoin. Let's go. So yeah, where are we at on Bitcoin? Let's talk about that. Any love for Algo? I like Algorand just fine. It's made some big moves. It's a good quality project. What's the founder's name? Oh goodness gracious, the MIT guy. Smart guy, knows his stuff. The other thing about Avalanche, I'll tell you, Avalanche and Algorand both, they don't have the development activity I'd like to see. That's what the biggest issue I see with Avalanche right now is their actual commits and known GitHub repositories are actually kind of surprisingly low. And it may be, again, because it's Polkadot's kind of got the same thing going on. They're very focused on helping all these new projects that are going to be coming in and snapping in. So with Avalanche, they've got these subnets, right? So whereas Polkadot has parachains, Avalanche has subnets. And so it's just their way of dividing up and allowing multiple projects to kind of snap into their ecosystem. And but there's surprisingly low developer activity on Avalanche, and so that gives me a little bit of pause as well on it. and some of these others. And so, but Algorand is kind of the same. They've been pretty sluggish on their the development activity. But if I go look at the chart here, I mean, it's a good project, but it's a very fast layer 1, and that's just not enough anymore. Like, it doesn't have the smart contract finality, speed, and abilities that other more advanced blockchains have. I shouldn't say more advanced. I mean, Algorand's pretty advanced. It's just they developed this with transaction speed in mind, very much so. So they're very fast. They're good for things like maybe, moving, USDC is on Algorand and on Solana, right? Last I checked. So another thing too that's becoming kind of obvious is the market doesn't care about decentralization as much as I do, but I think it's a temporary thing. I think the market doesn't care about decentralization right now because all they're looking at is how fast something is and how, what the metrics are. But when regulation comes and when the SEC comes to calling, they're going to care about decentralization. So that's the other thing is there's also a lot of regulation FUD. Let's just talk about that for just a second. So in between the I can't even say the name of the company, Evergrande. Between the Evergrande FUD, there's all this SEC and Gary Genslinger, whatever how you say his name. He's going live today sometime to talk about crypto. I had maybe a tweet up here somewhere. I can't find it right now. So he's supposed to be talking about. He's the MIT. I think he did some courses at MIT where he instructed on did some classes on crypto. So he knows crypto. So everybody kind of was thinking that it's gonna be a really good thing that that he's in the SEC now. He knows a lot about crypto. The problem is that means he knows how to go find things that are not truly decentralized and bring them under the control of the SEC, which is going to be bad. So in all the SEC FUD, remember the only crypto that really can escape the grasp of the SEC is Bitcoin. There's nothing they can do about it. There's just nothing they can do. You can't shut it down. You can't. You just can't. Other than making it difficult for miners and exchanges, which will hurt the price. Obviously, you're never going to actually kill it from that perspective, but they can absolutely put the screws to like even Ethereum, right? So when right now everybody's Solana is the greatest thing ever. When the SEC comes knocking, they're going to care about decentralization. Obviously you saw what happened to XRP, and XRP might end up winning that case, which would be interesting if they end up winning. I don't think they are. I think people have a little bit of hopium that they're going to win. I think there's going to be a compromise of some type, but this is what could happen to Solana and a lot of these others, when the SEC comes a calling. That's not a very happy looking chart if you bought over here in the Mania. So let me show you, for example, let's go look at Solana. So imagine if the rest of this chart looked like the right hand side of this. And it's not impossible that this happens, right? So just keep that in mind. So this is where we're at on Solana. And this is what happens when the SEC gets involved. Over here. Just keep that in mind, please. So he's talking today. We'll see what he has to say, see what if he's just being kind of general or if he's giving any information. I don't expect him to really say a whole lot, honestly. All right. What about DeFi plays? Thank you. Yeah, my exposure to DeFi is much more just in the ecosystems that power them. So the projects that power them, namely Ethereum and Matic. Loopring to a small degree, and then Cardano obviously as a speculative play. Those would be what I would be focused on. Don't light up some more music for myself. That's where I would be focused myself. I have Outrun, but who is developing on the platform? There are some projects going live on Outrun, but yeah, you're Citric, you preach. Yeah, I've been making the same claim, right? Like right now today, I think that we are going to have probably a strong end of the year on crypto, and then maybe some mania on the altcoins early next year. We'll see if it plays out like it did in 2017, right? But that's what we're kind of looking at potentially happening. So what I'm focused on is what crypto projects that have a lot of potential are going to do well in that market environment. And then after that, then I'm going to take a more serious look around in the bear market, 2022, 2023, and see who's actually getting real adoption. And then I will be loading up on those projects that are getting real adoption when there's a broad, crypto market capitulation. Then I'll be looking to buy those projects that are getting market adoption on those capitulation moves for the next, phase of the cycle. As of right now, Elrond does have some projects developing out. There's some gaming projects. They do have their Maiar decentralization. It's kind of, DEX going live here pretty soon. So some exciting things happening, but it's not, it's not anywhere near the adoption of Ethereum or even Solana for that matter. The adoption 2022 is going to be telling. And when we get that capitulation low, maybe late 2022, early 2023, whenever that might happen, that's going to be, we're going to be researching all through next year to figure out who's getting real adoption, what are the real projects, and when the whole market capitulates, we're going to be swooping in to buy as much of those projects that have real market adoption as possible. And if Elrond's one of them, we'll buy a lot of Elrond. If Elrond doesn't get market adoption, it may be Cardano, it may be Avalanche, it may be somebody else entirely. We don't know yet. It may simply be Ethereum and Ethereum Layer 2 projects and Bitcoin again, right? the pattern may repeat itself. I don't know. We're going to figure that out together, though. Atom is still undervalued. Oh, of course it is. Yeah, it's post-hype. That's the problem. That's the thing about crypto is that everybody's so, infatuated with how good their project is. It doesn't matter. Like Atom is a fantastic example of this. Atom has so much real adoption. It's crazy, and it's got so many projects that are built on it. It's crazy, but it doesn't get anywhere near the hype of these others because it's already seen its potential. It's already gone through those phases, and this is post-hype. This is post-hype. This is real adoption, and you'll get some new, fresh rounds of hype, of course. But these other projects, again, like Solana, these things are going to pump way more, and all the excitement as number go up, people chase number go up, and they're going to leave, much more solid investments like, Cosmos on the vine, and have their money all tied up in these super speculative plays that are going up for the sake of going up. But yeah, I was like, there's no doubt in my mind that Cosmos is a better purchase today than Solana is. No doubt at all. Cardano's struggling for sure. Cardano, price-wise? It's doing exactly what I thought it would do. Like, I am not at all surprised. Not one bit. So yeah, I knew this was the perfect time to take profit. This is where I rotated. This was as Cardano did a fantastic, it rolled over at the exact perfect time. Coming in, just ahead of that launch, and then here was the launch over here. Yeah. So had this big sell-off. Man, I rotated from here to Elrond up here because it was just beyond obvious. The big move, buy the news, or sell the rumor, or buy the rumor, sell the news. Goodness gracious. So we knew we were heading to a sell the news event. So this was a total 100% take profit moment. And it was going to consolidate down here. So now that's what it's doing. Now the next areas to watch for purchase on Cardano are, I said, okay, maybe if we got down to 150 or something, that'd be great. We did wick down to almost below $2. Good place to add. We had this big wick down to below $1 over here, and the other, the summer sell-off a couple times. That'd have been a great place to add. $2 might be a good place to add. I don't know. I'm gonna keep an eye on this. This is ADA USD. I need to look at the ADA BTC chart. Is what matters to me. Yeah. So you see here, this is the entire time. This line right here, this yellow line, was my first take profit target for this is what I called alt season 1 take profit target. Now we ended up having a take profit alt season 1 right here. That's where it capped out at. But then we just got this big move on the smart contracts thing, really close to this. This is my alt season 2 take profit. So we got really, really close, and it wasn't quite. This is where we got. This is where alt season 1 actually ended. This was a mini peak in between here because of Alonzo hard fork. But yeah, so it's got some room to go. You compare that to Elrond, which is it's just entering price discovery, I don't think it was around. I think this will probably have a lot more upside. I think Cardano is capped to about its prior all-time. It might blow out its prior all-time high. I don't know. I don't think so, though. I really don't. I think, it's just a larger market cap now. It's probably going to do something similar where it gets a little bit shy of it and rolls over. If you look at ETH BTC, let me show you this with you. All right. Now everybody talks about the flippening. The flippening ain't happening, y'all. This is the highest it's ever going to be, probably, most likely. And then it had a lower. So this was alt season 1 last cycle, alt season 2. This is alt season 1. This is our kind of mini alt season that we're having, right? With Cardano, you saw where it got above this, right? And I think alt season 2, is actually going to come back. And this is what I forgot last time. Is alt season 1 actually outpaced on the BTC charts alt season 2. So I gotta keep remembering that. So alt season 2 might actually disappoint. It might just come bounce back from here to there. We don't know. But remember, everything other than Bitcoin have the headwinds of Gary at the SEC coming after them now, potentially, right? And the only safe haven is Bitcoin. He can't touch that. There's no way. It's like, unless he can find Satoshi, that's about the only way. If he can prove who Satoshi is and bring him in for questioning, then maybe he can go after it a little bit, but he'd have to do that. So, I also think it's another potential catalyst for why I've been waiting for it to happen and just don't know when it's going to happen. I know it probably is more likely to happen than not. Something is going to create a catalyst that sends money flowing into Bitcoin and not into the other altcoins, whether it's SEC regulation, or if it's a sell-off, or if it's FUD, or if it's just good news. Just countries are adopting Bitcoin and companies are putting Bitcoin on the balance sheet, and the rest of the crypto projects don't really have the same adoption going on. It could very well be that it's just that Bitcoin's getting all the hype. I don't know. And it's because it's getting all the real adoption. I don't know. Obviously, Ethereum has massive real adoption. And obviously, here's the other thing to keep in mind. Right? Nobody can deny that today, Ethereum is more valuable versus Bitcoin than it was here. But that's not what the chart shows, right? The chart shows that if you look at it purely from Ethereum was more valuable versus Bitcoin back in 2017 than it is now. There's no way on earth that's true, right? This was just speculation bubble euphoria of, this is the next Bitcoin. Ethereum has more real activity, more locked in value on it than Bitcoin does. Period. End of story. It's got more going for it than Bitcoin does all day long as far as real usage. But what everybody keeps forgetting is that Ethereum is not the reserve asset for crypto. Bitcoin is. So at the end of the day, the more stuff Ethereum has going on for it, the better that is for Bitcoin. The more stuff Solana has going on for it, the better that is for Bitcoin. The more stuff Avalanche has going on for it, the better that is for Bitcoin. So forth and so on. And I've had a bunch of Elrond fans that are, Elrond's so much better than Bitcoin, it's going to kill Bitcoin. That would be true if your reserve asset that you were tied to wasn't the thing you're saying you're going to overtake. It's kind of like saying that, Google is such a fantastic company, or SpaceX, or whatever. Pick your favorite company. That it's gonna overtake the U.S. dollar. What? If it's a U.S.-based company, how is a U.S.-based company going to overtake the thing onto which it transacts and is measured? It's not. That's a weird analogy. So that's what people don't get about Bitcoin. It's not. It's not as it being used. It's not. This is the reserve asset for crypto, and until it's not, anything good that happens in crypto is good for Bitcoin. That's just the way it is. If you got a lot of cool stuff going on, Ethereum and Solana and Cardano and Elrond and Avalanche, it's all good for Bitcoin. Because Bitcoin is the asset, the reserve asset for all that class. And it will continue to be because it's the only one that the SEC can't go after at all, right? And so it's the only one that's really truly immune from direct regulation. Now it's not immune to indirect regulation, of course. They can go after exchanges and miners and stuff like that, but it's not going to be affected by direct regulation. So the other what was this? I was making another point here about Bitcoin. No, I posted this chart. I posted this yesterday. So everybody's, it's too big of a market cap. It can't go from a $1 trillion market cap to $5 trillion market cap that fast. Oh, really? Okay, gold has been around for 5,000 years, right? Do we all understand this? Everybody knows this, right? Everybody knows history. Like, people have been using gold as a medium of exchange and as a store of value for thousands of years. And in 1978, for whatever reason, there's a lot of reasons for it, right? But for multiple reasons, all of a sudden, people started buying gold. And gold was in demand, and there was a supply shock, and it sent the price of gold up from $178 a troy ounce up to almost $900, right? In the matter of a couple of years. And within a matter of like 4 months, I believe, something like that, it gained almost from $275 to the top at $875 in a few months. Gold, this asset that's been, everybody knows what it is. Didn't gain usage overnight that much, right? It wasn't getting a billion new users onboarded a day or something crazy, right? No, it's just an asset that because it's a store of value, it's a type of money in some degree, right? It's not a currency, but it's a form of money. It's a store of value. These type of assets are not bound by things that people who keep telling me that, once it gets over $1 trillion market cap, it needs all this capital infusion and move it. No, it's not equity. Equities, they're all thinking about things that have some sort of finite fundamentals to them, right? And so, for example, Google or Tesla can't go from $1 trillion market cap to $5 trillion market cap very realistically in a few months. That's probably not going to happen because they're bound by more valuation metrics. Now, if they were to do that, the broad market's probably doing something crazy like that, right? There's just a huge and it's not just that one particular stock or company that's doing that. It's a broad market, crazy blow off top. But assets like gold are not bound by any valuation metric. They are the measuring stick. And when you're the measuring stick, if all of a sudden, we've got a lot of people that are trying to find safe haven in that asset, then this is the type of thing that happens. And so, gold went from $178 in 1978. Now it's, people freak out when it's sitting below 2,000. Well, that's a 10x, but in this short period of time right here, it went from, it broke the mold and went from this $1 trillion. Once it broke $1 trillion market cap, it was off to the races, right? And so, yeah, it's been really boring the last few years, but this is what can happen. So if gold can do this, Bitcoin, which is not only a store of value, for a lot of the younger generations, Bitcoin is going to replace gold. It can be argued that it's superior to gold in many properties, namely in that it's very fungible, portable. I can move $1 billion of Bitcoin instantaneously halfway around the world in a few, in under an hour. I can have a $1 billion equivalent US dollars value move from here to around the world. You can't do that with gold, right? And so, as that type of asset class, it's both a reserve asset class for all of crypto. Again, so the more stuff that there's going on for crypto, the better it is for Bitcoin. And also, Bitcoin is being adopted as legal tender by multiple countries now, right? So, obviously, we know El Salvador, and there's other South American countries, and I don't want to. It's the not Uganda. Anyway, there's another country that made it legal tender, and I think it was maybe Cuba or somebody too. But it's as a currency, that changes everything, right? Because its value is much more tied to all of the assets unto which it is a reserve asset for, right? So its valuation has nothing to do with how much network effect it has, or network effect doesn't matter, but it has nothing to do with the transaction volume on chain or anything like that. It's what is it a reserve for, and how big is that market? And if it starts to be used, say, for energy trading or something, it would just absolutely explode. But if it's also seen as a competitor to gold, there's so many narratives out there that could cause a huge move in the price of Bitcoin. A, people start to accept that it's a competitor to gold. B, it's used for, say, energy trading. C, the crypto landscape continues to explode and Bitcoin continues to be the reserve asset for crypto. There's a million reasons why, but it's done these big moves, and specifically September through the end of the year, many times, right? Many times have we gone from, a capitulation low toward the end of September to a really strong price to finish the year. So this is not without precedent. And if gold can do this, a exponential growth asset can certainly do this, right? And so that's just reality. I want to get that out there. So those are my 2 cents on all that. Google says Winklevoss have 70,000 Bitcoin. Oh, thanks for confirming that. So Steller has out-chatted the Winklevoss boys. That's crazy. But remember, the other thing too to keep in mind is that Steller borrowed a lot of money to get that Bitcoin. So it is technically not all his, right? So that's the other thing to keep in mind. But MicroStrategies as an entity does control that much Bitcoin. Now again, they have to pay a lot of that stuff back somehow, and they do have cash flow. And maybe they can keep restructuring things and keep all that Bitcoin on their balance sheet. I would not be shocked if when we get a big move like this, if it happens, not a certainty, that they don't trim a little bit, because it would be irresponsible not to trim at least some. All right, just to put a little bit of to take any of their high interest stuff and roll it over. Adam is still undervalued. There are DeFi gems sprawling from the Cosmos ecosystem. Yes, there's lots of little gems. There's a lot. I don't have time, unfortunately, to research. There's so many little gems, that are out there. I don't just buy them because it pops up as like, oh, somebody's talking about it. I have to go spend time and research these things before I put my money into them. It gives me a higher odds of also hitting on these projects and not being a big bust. But I'm not a fan of just buying stuff just because it's being hyped. I have to research it. But I need to. That's something else that. I think it's going to be more important for us in the coming bear market whenever we get there. When we clearly get there, I mean, there's a chance. Of course, there's a chance that this was the peak. This is a dead cat bounce, and we're curling over. Last little note here: my line in the sand is this little orange line right here. Right. This is what I look for. I'm going to share this with you, and then we're going to wrap up. I'm going to look at some comments here, make sure I didn't miss anything. Did I miss any really good comments or questions? You can repost your question if I missed it real fast, so I can see it here. Silvio Macaulay, thank you. Algorand's founder, Silvio Macaulay. Anything happening with on-chain metrics yet? Are you using? Oh yeah. So a few coins have been coming on exchange, which has caused me to be a little bit tepid with a few things. But we had such a huge drawdown off of exchange that, and on a sell-off like this, I'm not too shocked. But let me just take a look at where we're at with coins coming onto exchange here. Let's make this bigger. I'll bring this over here for you guys. Let me just zoom in on this real fast. Let's look at the on-chain. Yeah, coins. Is that right? Yep. So we've had a small influx of coins onto exchange. This is something to watch closely. This is also a reason not to get overhyped and go just buy a bunch of, YOLO in, buy the dip, leveraged, right? Now, if you've got funds available and you've just been waiting to buy the dip, this is not a bad time, right? That's just my opinion. I've got my brother on high alert. I know he's got a limit order. I told him put a limit order in at 40,000 for now, right at the 120-day SMA. If nothing else, and I've got the same limit order at 38. I've got limit orders myself personally at 38 and $40,100 and 38,000, just in case we get a big wick down to those two levels. Here's the deal: if we come down to 40,000, hit it, and we don't get a good bounce, and we get a small bounce and roll over or slam under it, it's going to come back up to it to test it, and we'll just have to exit as close to our entry as we can. So that's a good risk-reward place for me, in my opinion. Not financial advice, very not financial advice. But right here is probably the greatest risk-reward, because I know that if it breaks down further and say goes to the low 30s, it's probably coming up really close to retest, and then as soon as it curls over, I can get out of a small loss. Or go ahead and put you a nice tight stop loss. So for me, I got that order at 40 and 38,000. I'm really hesitant to put in a stop loss right now because these wicks can get kind of crazy. But we don't have a lot of leverage in the system, so I don't know how bad the wicks would be. But you can obviously be safe and put yourself a stop loss at 36.5, say. And if it doesn't get stopped there, it's a relatively small loss. Hopefully it's a small loss if you're not going like crazy YOLO leverage, which you shouldn't be. especially right now. My goodness. What was the question though? Somebody asked a question about something. I forgot what it was. Oh, on chain. So this is what gives me pause about buying the dip. Okay, that's the point. I'm really waiting for the repair because I see this happening. I see a little bit of coins coming onto exchange. Until I see this trend reverse, I'm not really a big fan of just buying the dip unless it's super attractive risk reward area. And I had my $40,000. I'll tell you this right now. The other thing, had this actually wicked down just low enough to get my $40,000 entry, I would have already exited 100%. On that perfect, beautiful, quick bounce, I just would have gone ahead and sold that and then waited for the repair to re-enter that, right? That's a really good risk reward for me though, right? Buy it at 40. If it keeps going lower, I know it's coming right back up there. I just have to exit at break even. But most likely it's going to do exactly what it did, get a nice bounce, and then you see it rolling over, out, and just wait for the full repair. But because I see this, I'm not going to be, that's why I'm not just buying the dip right now. In this green support zone that we're in, this is, otherwise I would be. We're in this support zone. I got this from Big Cheds on Twitter. Good trader, really good trader, obviously. He uses the SMAs like I do. I got this from him, right? So we're in that beautiful support band right now. So this is a great DCA spot potentially, but I'm not going to do it because of this fact. I see coins coming on exchange. I'm just going to be patient and I'm going to wait for the repair. Either I'm going to see coins coming back off of exchange and we're going to still be in that support area. Then I will probably make a purchase. Otherwise, I'm waiting for us to get back outside at least this trend line. And what this trend line, this very parabolic downtrend trend line tells me, this is not where I would take an entry on a breakout, retest, resumption of that trend line, because what can happen is it can keep falling down. It's way too steep of a trend line. What that tells me is the horizontal level to start watching. So for example, if we were to take that, say we bounce off of this level, and I were to take this out and come back and I retested that trend line right there and showed some resumption, this is the level I'm now watching. The next time it comes back down to that same level, if it holds, that is an entry. But the problem is I'm not going to take this coming back into this trend line or even a resumption off of it, because it can quickly just continue to ping pong back down that very steep downtrend, which is not something you want. You might be on the right side of this trend line, but it can go down fast. I mean, that's, if you were to try to take an entry on that, that would put you, you could be down by early October to $20,000. It's like let's see here. Hold on, let me keep going with this just to illustrate the point. Yeah, by the end of October, you'd be down to $10,000 following that trend line, right? Yeah, you're on the right side of it, but Bitcoin went from 42,000 to 10,000. It's not what you want to do. What you want to do is you want to use that as a barometer of, okay, when is the first line of sense of repair in? And then that tells me the key horizontals to start watching, which then gives me the entry. So just to recap, if we were to bounce, maybe take this out. When you see that bounce off of that level, that tells you the horizontal level to start watching. And then when you get a test of it, you can try a small entry with a super tight stop loss and a resumption, another entry, something like that. That's how I play that. Now this trend line over here, this one's not as parabolic. I might be more inclined to give it a shot on a good 12-hour, entry over here. The same thing applies to this one. It's really when we break this downtrend trend line, that's the support level wherever we're kind of close to on that. The next support level it tests and bounces. That's the support level I start watching for an entry. But if it's a really good concurrent on this trend line, like it hits that support and the trend line it bounces, I would probably go ahead and take a little entry there. I don't like that it's coming right into resistance right there, so maybe give me a little bit of pause. But this is the trend line. This one's not too terribly steep. This is the one I think you can take action off of. If you were to get, because you're above this long-term trend line, you're above this resistance, and by then a lot of these resistances are less applicable because price is both taking them out to the downside and then back to the upside. If you were to get outside of here, this is the good entry. And I would absolutely 100% take entries, actual CTM entries, off of a break, retest, resumption of that trend line. Small nuanced thing about dealing with trend lines and downtrend trend lines. I've made reference to this before. I've talked about how like sometimes these are way too steep. You can't possibly take entries on them. I've never really spelled out that, that kind of guides me though into what horizontal levels to dial into even more. That's how I use those. All right, guys. So conclusion, do you think it's early or worth it to be like 1 or 2% of portfolio in little gems like ADA, DOT, Cosmos ecosystems? Oh, no, yeah, 1 to 2%. Speculate all day long. Yeah, you're probably not going to lose anything. Honestly, these little gems, at worst they're going to go sideways and just dump them when we get to the top of the market. But yeah, I mean, I haven't done it yet just because I'm so focused on this and other things. But yeah, there's little projects in Cardano I want to get a little exposure to. The other thing too is those little gems are paying to buy. You can't just go buy them on KuCoin or something. Typically, you gotta, transfer, use some sort of DEX or something. And you gotta, find the way to get those. So until they're available on major exchanges, a lot of times I end up I only buy ones that I'm like really excited about because they're kind of a pain to go acquire. All right. Chris, when you research projects, what things do you look for to determine, yes, I put my money in the project? Chris, I would say the most important thing I'm looking at is signs of integrity, I would say is the most important thing. I'm looking for, does this project and the founders demonstrate that they have integrity? Because otherwise, what they put out could just be a bunch of hogwash, and there's a lot of times there's really no good way of knowing until later. The second thing I look for is development activity. Is this really an active project? Are they really developing, or is this just a bunch of white paper and slideware? The third thing I look for is within the core technology, I look for key gotchas, like things that are clearly going to lead to centralization, things that don't seem right to me, like I don't see how their claims line up to what they're showing in the white paper, how on earth that could possibly work. The key words I look for are things like DPoS, a delegated proof of stake. That's a form of centralization. You're delegating to a handful of select delegators, and this is a shortcut, a trick to make your chain faster because you have less validators that have to come to consensus. Things like that I look for. When I see that, I'm out, pretty much immediately. I mean, it's just a cheap trick. But stuff like that. That's what I look for. And then, kind of lastly, I look at just the general community. So I go, okay, and, get on Twitter, get on most of them have Telegram groups, and I just kind of get a sense for, is this a YOLO number go up crowd? And I just stay far away from those. Or is this a bunch of people talking about the tech, talking about, developers talking about, okay, I got this commit coming, I got this, that. And if I see a lot of that type of activity, it's really focused on the technology and the use cases and upcoming projects, and people aren't talking about, is it going to go up or what, and like that also is what I look for. A bunch of sometimes you see these like, oh, this project looks interesting. You get on the Telegram, it's nothing but people talking about how high the price can get and what exchange is going to be listed on next. And like as soon as I start seeing that type of chatter, I'm out, done. Like I don't want anything to do with that. All right, guys, I'm gonna wrap. Thank you so much for your time too. Where's my Doge-wave, y'all? Y'all, I am in Texas, so I'm allowed to say y'all. Let's see here. Y'all, where is it? There it is. Have a great one. I just saw a question I really want to answer real fast. I got a question here. It's a little bonus session. Can Elrond code really compete with Cardano, and what's behind Cardano? I do want to answer that really briefly and say, yeah. So Elrond absolutely can compete with the core code, the core project. Cardano is such a different animal. What's really going to be interesting to see how developers end up using it. But Cardano is the long game. It's the long game. And Elrond is also playing things fairly well for the long game as well. But Cardano, it's going to take a really long time, but it's built for the future. And so Elrond can compete, yes. Cardano does have. I still am in the camp. If I had to buy, if I had to put all my money into one of the two projects and stake my future on it, it would be Cardano. Just put it that way. All right, take care, everybody.